Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gunn. Jumping into the charts on this December 19th. So as Christmas is approaching, we keep hearing little whispers of, is Santa coming? Are we going to get a little bit of a Christmas rally? Well, clearly we have not had a Christmas rally up until this date. Now there's still a few more trading sessions before we take the holiday, and I do think that we're going to see the markets lighten up in volume and actually potentially chop maybe in and around this range from this gap fill down here to potentially this gap fill around 390. So I think we are close to maybe a short-term minor bounce, but let's be clear that these markets are likely going to head lower. Now, whether or not it's in the new year that we start making new lows from this point, but I do think that we've had a pretty incredible sell-off. The fact that we were trading all the way at 410 just a few trading sessions ago, and now we're all the way at 379. We pierced 378. So that is truly a terrific sell-off, and that is the power of what happens in bear markets. You have these floats up where it looks like it's consolidating bullishly, sucking in new money, but never actually confirming above the key technical levels, and stocks clearly take the staircase up as seen over here, elevator down. Very similar to this scenario where in the summer you had your light volume rally, stocks are just floating, and then look at the sell-off. Basically, what it took here in a 2 to 3 week period, you wiped out in basically 1.5 weeks. So again, that old saying that stocks take the staircase down is truly true in a bear market, and that's kind of what we have to be mindful of. But now that we've had a 1, 2, 3, 4, 5 day sell-off, consecutive sell-off, we've pierced the 50-day moving average. It was not long ago that there were a lot of bulls shouting from the mountains, the low is in, we're off to make new highs, we're going to be testing the new all-time high. People forget this is still a quantitative tightening cycle. Even if interest rates start to fall sharply, that is generally not a good thing. And that typically means that something in the financial system is broken. But nonetheless, I still think there's a great shot that sometime this week we can fill this technical gap over here. Now, very near term, we are oversold, which is why we started to offload and pare some of our shorts, and we started to accumulate a couple long positions just due to the technical levels. But nonetheless, I do think that potentially this week there's a very likelihood we fill this technical gap fill over here, and I do anticipate a small bounce. I don't anticipate us challenging this low until the new year. So that is kind of my expectations. Taking a look at the QQQ, the Nasdaq has also had a pretty terrific sell-off. Same sort of aspect. I think we potentially have a very strong possibility of testing this gap fill over here sometime this week. If it's not this week, then it will likely be very next week or as we head into the new year. But I do think that the Qs will head lower. I still have a longer term target. We have not fulfilled the downside target of this little mini head and shoulders, but I still think that we hit the pre-COVID high, and as the recession takes hold, we likely head even lower in that aspect. And believe it or not, this is where we started printing the QE and lowering interest rates. So if you're a firm believer of mean reversion, you would likely anticipate that the Fed is going to basically send us back to these COVID lows in a recession, due to the fact that I believe they are over-tightening into a recession, because the majority of the rate hikes that they've previously done, which are the bigger ones, have not hit the real economy yet and still have to work itself through. And the big important period that's coming up in the housing market, especially in the Canadian housing market, is the simple fact that we have a great deal of renewals approaching in the February-March period, where roughly 20% of the Canadian real estate market will renew at a higher rate, likely a rate that is probably double to triple higher than their previous rate. And keep in mind that most Canadian real estates are on a 5-year fixed term, so every 5 years we have to renew. So if these rates stay elevated, it will be a detrimental impact to the real estate market. And when you factor in that real estate is roughly 25% of Canadian GDP, that is a certain slowdown that is bound to happen. And then also when you look at real estate in other countries, you know, the US still has overpriced. Pretty much most countries still have overpriced real estates in comparison to where interest rates are. But it just takes time for the sellers to basically panic out of the market as they see their neighbors selling for lower and lower and lower, because I do think that period will come as months pass by. Taking a look at oil, oil received a bounce day. It was up 1.74%, but nothing to really sneeze at here. My trend line here on WTI, connecting this pivot to this pivot to this pivot, that's still the big line over here. You can see you pierced through, could not hold it, sold back off, had a nice bounce today, but you're closing still below that trend line. So really anything below this yellow trend line is still technically bearish consolidation. And even though this may be looking like a short-term bull flag forming, we have to be very, very careful about when levels confirm and start trading below or under a key resistance line. So right now oil is still bearish for me. I still see a potential wedge pattern playing out here. It is a down-sloping wedge, so maybe it does favor a move to the upside as it gets to the apex of the triangle. But that is kind of my downside target where I will be looking to go long oil if it hits the $68 barrel. You can see that that may coincide with the apex of this down-sloping wedge pattern, which usually does favor a breakout to the upside. Now, I don't think that we're going to get a breakout on oil that sends us to the all-time highs or even near $100 a barrel. I simply think that if we get a price action that trends into the apex, and then we have a bounce basically back up to this 77 or this top of this range at some point in time. That's kind of my expectations for oil. Obviously, it's not a guarantee that that's going to play out, but it's certainly what I'm trying to pay attention to. Taking a look at natural gas is extremely weak. If we take a look at this long-term perspective, let me just clear up some of these trend lines here. Okay, so natural gas was putting a little bit of this bullish consolidation. That has failed. You've now retraced back to the breakout zone, which is this down-sloping trend line. You can see you do have two trend lines of support going all the way back to your pivot in June, connecting your pivots here, your pivot here, and then your pivot in June again, connecting this recent pivot low over here. So you are technically at a little bit of support, but the energy sector is flashing signs of warning to me for the economy. When we start seeing dramatic fluctuations in natural gas, and natural gas is a very, very volatile asset, but natural gas's price action is teetering on a major, major breakdown. If we start breaking past these trend lines, watch out for the downside action below. I'm still hoping that we potentially get another bounce because I would love to continue to short this trade. Let's see if I can pull up the gold chart for us just so we can see what gold is doing. So gold today did have a slight down day, basically still teetering on that 200-day moving average. Now you are putting a little bit of bearish consolidation. You have this down move over here, this wide range red bar, and you also have this down move over here. So you're trading in two wide range red bars. Despite the major term is bearish, I still think we have a great shot at potentially retracing back to the 1720. That's where I will be a potential buyer via swing trade position on gold. The DXY is interesting because it still is implying that you have a little bit more upside to 105.60, which means that the markets will likely see downside. If you take a look at the weekly candle, I didn't really touch base on this, but the weekly candle came down last week and you pierced the 50-day moving average and you got a beautiful reversal off of technical support. You can see it was this previous pivot high back in 2017, as well as the 50-day moving average, as well as this multi-week period of consolidation. So lots of support, and you did put in a weekly reversal signal on the dollar. So what that tells me is that that potential gold level at 1720 may coincide with a dollar bounce. I potentially see the dollar maximum move going to 106.96 or maybe piercing 107, but that is really the max upside I see in the next basically 1 to 2 weeks, which should coincide with that push down in gold to that technical level where we will be a buyer from. Taking a look at the US 2-year yield, so the bond market got trashed today. Basically all the short-term and long-term yields were up. Notice how we have not confirmed below this trend line over here, which basically will trigger a bigger topping formation. So that is teetering on the brink of faltering. If it does start to falter, we have to anticipate, why is it faltering? Why are yields starting to come down faster, even though the Fed has expressed that they need to keep yields strong, so yields much higher to tame inflation? So that's kind of the scenario that we're at. If we start witnessing yields falling, that is going to be detrimental for the economy because it's likely signaling a deflationary event in the financial system or the bond market. But overall yields are still positive, which is why the markets were under a lot of pressure. Even if we take a look at the US 10-year yield, which I'll pull up for us, you can see the US 10-year yield is almost putting a little bit of this basing formation, which does mean it could potentially test all the way to the upside of this channel around 3.65%. And then even a likely scenario is that we could see a move all the way back to this previous November 10 low, this wide range red sell-off at around 3.8%. That's kind of my max move. It may coincide with this 50 daily moving average as resistance, but the long end yields are looking poised to potentially move a little bit higher as we have a little bit of the spacing formation coming in. And one of the reasons why I'm saying that is because notice how you had your initial sell-off, rally, another big sell-off over here, but you failed to take out that low. So you're making a short-term series of higher lows. You made a low here, a higher low, and a higher low. So 3 higher lows is generally the start of a short-term new trend. I'm not saying that yields are going to test the all-time highs here, but it simply means that there's likely some interim upside in the near term, which should coincide with pressure on the overall markets. Now, one thing I want to touch base on is we've been hearing a lot that the Fed is actually going to be bringing their terminal rate to the 5.1% mark. So if the Fed were to bring their terminal rate to the 5.1% mark, that takes us all the way up here to this 5.1 level. Now, the 2-year yield is always mimicking what the federal fund rate is. Right now, the Fed fund rate is at 4.25, and the bond market is not believing the Fed that they're going to take it to 5.1%, despite them saying that. So why are we having this divergence between what the bond market thinks and what the Fed is thinking? Who's right? Who's wrong? Is the Fed right? Is the Fed wrong? Typically, in most scenarios, the market is right. So because the bond market is bigger than the Fed, and because the bond market has the most savvy investors and slower capital investing, you typically want to take what they are breathing into perspective. And because the 2-year yield is not rallying to this 5.1% and still stuck under major resistance, I'm finding it very difficult that the Fed is even going to have the ability to move to that 5.1% rate. I think that this is potentially signaling that something may break before they have the opportunity to move their terminal rate all the way up to 5.1%. Now, my opinion and perspective would change if I started seeing the 2-year yield confirm back above this trend line over here, this little neckline. If we can get above this neckline over here on the 2-year yield, then my perspective may change, and that may signal that we do have potentially higher rates in the near term. But until now, basically, I'm not believing that the Fed is going to even have the ability to move based off of this 2-year yield chart and what the bond market is signaling. Now, I do want to touch base on Bitcoin. Bitcoin's very, very intriguing. You can see you had your bull flag over here. Basically, that pattern failed with the daily reversal candle. And now look at this beautiful bear flag, inside bar bear flag forming right underneath the low point of that bull flag pattern. This is textbook bearish consolidation. What was support is now acting as resistance. It can't get any more textbook than this and technical. Bitcoin recently has been acting in such a technical manner that it is a phenomenal asset to trade. I still think that the long term, because all time frames have switched to the bearish side, meaning that the short term is bearish, the near term, the intermediate is bearish, and the long term is bearish, we likely will see a big flush in Bitcoin sooner rather than later. Maybe it's in the new year, but I do think that Bitcoin is kind of teetering on the brink of a big collapse. And if we look at the BNB coin, we touched base on this in our little bit of a write-up with our members. Let me just flip to the right crypto coin here. Basically bring up my crypto charts. So BNB is very intriguing because you have triggered this head and shoulders pattern over here, broken the neckline, you've had a retrace to the neckline here, retrace to the neckline here. 2 failed attempts to recapture that neckline means that there's very, very likely probability that you head down. Now the downside pattern takes you to about 160-ish, give or take. But the intriguing thing about BNB is that if we look at this chart, and this is the weekly chart, there is no technical support from this 31 level all the way up to this 182 level, which means that if we start testing this range, there's a very likely scenario that something could break in the BNB coin. Now, maybe this has to do with potentially BNB misallocating the funds, or potentially the funds not even being there. Who knows? But if there's some systemic risk in Binance where their coin is kind of deemed a Ponzi scheme, that will likely take the market much, much lower. And I've been asking myself, what is going to, I have a downside target on Bitcoin of around basically, if worst case scenario, I do think we can test this 3,800 level by the COVID lows. But in terms of where there will be negative support, anywhere between 5,000 and 8,400 is going to be mega accumulation patterns. But I've been asking myself, what could take Bitcoin down another 50 to 60 to 70%, being the fact that it's already down around 75%? Well, if you simply analyze that, really the only thing that could take Bitcoin down is if there was a systemic collapse in Binance's platform, aka their BNB coin. And the very intriguing and kind of scary thing to analyze is that if we actually look at the FTT coin, which was the FTX coin, it's a very similar chart to BNB. You can see this range identified where you actually hit it, and hit it. There was no technical support in and around this 80% range, and look what happened. We all know what happened to FTX with their coin. Is Binance looming in the same manner? We saw them purchase Voyager today, so maybe that's potentially signaling kind of what, we had FTX buy BlockFi and a variety of other platforms right before they were going out of business, because those other smaller companies that were going out of business were the things that were backstopping them from falling sooner. But inevitably, all liquidity issues are revealed in a tightening cycle. It's just a matter of time. And it's very intriguing that this chart replicates the FTT token basically with a very high degree of correlation, which makes you wonder about this BNB token that potentially could be looming. If Binance were to have a systemic collapse, or this BNB token was a fraud, Bitcoin would have a dynamic sell-off, something that would be very difficult for many people to watch, but it would certainly be something that is needed in the space that would wipe out many of those useless tokens. We did cover a bunch of trades today, spanked some winners, so congratulations on that. We added to our go-to, so just taking a look at some of these charts is just truly incredible. I mean, GOTU, a Chinese company, yes, it's been beaten down, but when you see a move basically off the lows from here, 64 cents all the way to 304, in a straight parabolic move up, you are into resistance without any meaningful pullback. Although you have had a technical breakout from this level, you are due for a pullback. This is an over 400% move with really no consolidation. You're overbought in the short and near term. So I do think GOTU has a pretty substantial pullback, probably to this, at least this 250 area, 240 area, which would net us a pretty big gain. But China stocks have certainly been strong. If you look at another one, VIPS, kind of a very similar chart. But again, I'm starting to see distribution signals. Basically, when you start seeing this parabolic move up, and then all of a sudden an even sharper wedge pattern, upsloping wedge pattern occurring, that is certainly not favored of continued price action to the upside. We did also cover our IBM. One of the reasons I covered our IBM, I do think there's more downside, but you can see here it's had a nice bounce off that level. We hit the 50, you hit support here, basically this previous pivot, as well as this consolidation breakout zone. So IBM has had an impeccable sell-off, 4 or 5 day sell-off, so I do think that the markets were oversold. And this is the type of market where we start paring back our profits, covering our shorts if we have those dynamic sell-offs where markets have a sharp move from one point to another over a week span, and that's certainly what we've had. We also started buying a few names like Canopy Growth. Canopy Growth, I do like this chart because you can see it's already bounced off our level, but basically we have picked up CGC after all of this massive up move, you've retraced back to the breakout zone. You're now at technical support. CGC is chopping in a range. We are at the low end of this range. Could it go a little bit lower to test this double bottom? It absolutely could, but these are the oversold conditions we started buying into. The fact that it was trading at 478 basically just over a week and a half ago, and now we're picking up at 240 is a pretty impressive entry, I would say the least. And I still think that we could see CGC a buyout candidate at some point in time. But I do like these marijuana plays. They have paid us out handsomely. They do tend to go through a little bit of dilution, but nonetheless, this is a beautiful entry. You're at technical support in an oversold condition. We're also looking at Palantir. We're starting to accumulate a position there. Basically, Palantir made new 52-week lows today. The beautiful thing about Palantir here is that we actually have a weekly bottoming tail reversal candle over here that we can trade against. And we pierced that level today on a beautiful 1, 2, 3, 4, 5 bar sell-off. Arguably, this could be your capitulation washout sell-off. It was down over 7.97%. But I do think Palantir is one of those beaten down names. Yes, it could potentially go all the way to the bottom of this range. You can see that we have a big level at 574, which would still look to accumulate. But a type of stock like this could be a potential buyout. We could also wake up to a larger company purchasing them, or potentially a big time investor starting to accumulate. The valuations for some of these companies make sense. Even if the market is weak, a lot of these stocks will trend lower with a weaker market, but some of them in a market environment where we get a positive day will likely catch a very strong bid. But I do like these double bottom zones in an oversold condition to start accumulating trades. We did cover our Celsius, we covered our Splunk for a beautiful win. We're also buying CTVA. So CTVA is another company that's basically had an epic sell-off right into your 200-day moving average. You've pierced that. You're into this wide range red bar sell-off where we filled the technical gap today. Could CTVA go a little bit lower? Yes, there is another technical gap over here. But nonetheless, we are into some good support in an oversold condition, and these are the levels we're going to start accumulating positions at. We also did short 3M, so let me just pull up the 3M chart here. 3M is a nice, interesting play because in the short-term micro pattern, you actually have this beautiful head and shoulders pattern. You can see your left shoulder, your head, and then your right shoulder. The nice thing about this pattern is you did trigger it. You had a little bit of an attempt at a retrace on this day one, and then you had a retrace, a pierce of the neckline, and a failed to hold that neckline. So whenever I see price action retrace above the neckline intraday and then fail to hold those gains and close back below the neckline, it tells me that the likelihood of this pattern to trend lower and fulfill its downside target is very likely. So whenever you start seeing the price action get rejected off that key resistance line, that's when we know that this is a very high probable trade setup, and the downside move takes you to 111, which will net us a nice little score. It's just kind of a good 8 to 10% trade winner. Not a home run, but a nice one that we could have a very high probability of winning, especially since these markets are uber weak. So I do like trading these head and shoulders. Now, in the event that we confirm and close back above this neckline, all we'll have to do is stop out and lose, maybe a 1 or 2% loss on that trade. So I do think the risk to reward is fairly positive in our favor and likely to pay us off. Really, that sums it up for today. Lots of price action to continue to be aware of. It's very intriguing to see that people were so bullish on this market not so long ago. We have been bearish all this time, despite when we did play a big significant portion of this rally. But the fact that we're now trading back under these trend lines and we're in the middle of this range over here, a lot of people are now swinging back to the bearish side and saying we're going to head lower. So we're just going to have to take this bar by bar. I still think we head lower, but believe it or not, we should see somewhat of a little bit of a bounce, especially if we come down tomorrow right into this technical gap fill. There may be a little bit of a bigger bounce as we head into Christmas. It would actually be beautiful if tomorrow we had a nice flush down into this gap fill, and then I think we could see price action over the little bit of the light volume period trend up to fill this gap, which would be a beautiful shorting opportunity. And it could eventually also coincide with maybe this downsloping trend line again, which would be a big resistance level. There's also tax loss selling which could occur, which is maybe what we're seeing here, the beginning of tax loss selling, or it's simply the market's adjusting to that 5.1% potential benchmark rate that the Fed is supposed to be raising to, or it's potentially the market's pricing in a recession. Really, any which way you look at it, the risk to reward for me still favors the downside, so that's certainly how we're going to play it. But I'm not shy to pulling off our shorts and covering them and switching positions if we hit those technical support levels in good accumulation patterns. Really, that sums up today's video. Please give this video a big like down below, and we'll see you on the charts tomorrow. And congratulations, our swing trading accounts hit new highs today, so awesome job if you have been following our trade alerts. My personal portfolio is up over 71% year to date,